The rising cost of rent has finally stopped, but it's still near its record high point from the middle of 2022. Will rents continue to stay high, or will they slowly come down? This is the Market Brew. Hi everyone, Mike Tilford here. The U.S. rental market has been slowing for the past year, but nationwide median asking rent is still only $24 below its peak in the middle of 2022. If we look at this graph, we can see that rents have steadily increased since around February of 2021. They reached their peak around August of 2022 with a slight pullback over the prior 12 months. However, the spread between the high and the low over the prior year is only around 3%, but around a 20% increase over the prior 2 years. In percentage terms, rents were up 0.5% year over year in June, not far from May's 0.6% annual drop. Rents rose 1.7% from 1 month earlier in June. According to Taylor Marr, Redfin Deputy Chief Economist, the housing market tends to be downside sticky, which means rents don't typically fall much even when renter demand pulls back. Instead of lowering rents when business is slow, many landlords offer perks like a free month's rent or discounted parking, which tends to be less of a hit to profits. Marr continued, the steep slowdown in rent growth over the last year is providing some relief for renters, who now have more room to negotiate as their landlords grapple with rising vacancies. But with rents near their record high, most renters still aren't finding big bargains. Although the drop-off in rent growth hasn't done much for renters, it has helped ease the historic inflation plaguing U.S. consumers. This is important because one of the leading causes of inflation right now is the cost of shelter. A slowdown in rent growth could cause a decrease in overall inflation, which is what the Fed is looking for right now. This may entice the Federal Reserve to ease up on interest rate hikes and may actually cause them to decrease rates in the long run. Nationwide, rents have increased fastest in the Northeast and Midwest, with rents here in the West actually falling 0.3%. This slowing of rent in the West is in part due to how quickly it accelerated during the pandemic as people flooded into Sunbelt cities. Now, rents in those regions have more room to cool as supply catches up with demand. Now, despite all this, rents in the West are still up around 20% since the start of the pandemic. On top of this, there are no indications that these record high rental costs will be coming down anytime soon. Best case scenario right now, they will continue to maintain their current levels and not increase further. Locally, we can see rents are still quite high, even more so than the median price throughout the West. Median rent within the city of Simi Valley for single-family homes is sitting around $3,900 per month right now. The city of Thousand Oaks is even higher, with median single-family rent at around $4,500 per month. So rents probably aren't going to come down. If anything, they will probably just keep going up. If you're currently renting, it may be time to really take a moment and look at your options. Interest rates are pretty high right now. Compared to just a few years ago, rates are crazy high. However, the majority of economists believe that rates will come down by the end of 2023 or early 2024. If we look at the city of Simi Valley, the median list price of a home in the bottom 25% of homes is sitting below $800,000. The bottom quarter market segment is what we would consider entry-level homes within the area. Assuming a purchase price of $800,000 with a higher than average rate of 7.5%, including taxes and fees, we're sitting around a monthly payment of about $5,500. This is a pretty large increase from the current $3,900 per month in median rent. However, you need to remember that rental payment is a complete loss to the renter, as the money goes to the landlord, wherein that mortgage payment goes towards the principal and interest in your own home, which allows you to start building your own personal equity. If mortgage rates were to come down, as they are expected to, take a look at where that leaves your payment should you refinance in the near future. At 5%, your payments would decrease by around $1,000 per month to around $4,500 per month. That's still higher than the median rent, but not by much. And remember, this would all go towards building your own personal equity. These numbers are all just examples and can fluctuate greatly depending on your current situation and finances. So please look at these numbers with a huge grain of salt. So if buying is an option, you may wonder why not just wait until rates come down. I mean, this is logical, but ignoring one key factor. As rates start to decline, more and more buyers will re-enter the marketplace. The lower the rates go, the more competition you will have in purchasing a home. I mean, I don't know if we will reach the level of pandemonium that we had back during the height of the pandemic, but we may. We're already starting to see multiple buyers bidding on homes because of the lack of housing inventory. It could only get worse from here unless there is a sudden influx of homes for sale, which I really can't see happening. If you want to talk to someone about the possibility of home ownership, I am always available, so feel free to reach out. Well, that's it for today. I'll see you next time, and as always, I'm never too busy for your referrals.